Peace, family. So in this video, I'm going to be discussing a options trading strategy that I used to make close to 3 grand in about 1 month on a company that I absolutely despise. I had no intentions of buying the stock. However, when you're trading options, that happens sometimes. So check out this video to hear the brief details on how I made this money in roughly 4 weeks. Basically just doing nothing really, to be honest, just waiting for the stock to actually move in my favor. All right, so here we are at Yahoo Finance's website, and the company that I was referring to is Moderna, right? So Moderna, ticker symbol MRNA. So on August the 9th, Moderna stock shot up to roughly $493 per share of their stock. And so I saw this. I went into my stock brokerage account, was looking to put on some options trades, and I saw that because the implied volatility on Moderna was rather high, right? And so, an implied volatility, just real quickly, is the market's future expectation of the movement of a particular stock, right? So the higher, um, the larger the movement the market is expecting from a particular stock, the higher the implied volatility will be for that whatever stock you're looking at, right? So Moderna's IV was implied volatility was extremely high, and so I saw that I could actually sell a cash secured put option, right, and make a quick $350 for just being in the trade for a few days, right? For less than a week, I could make a quick $350. So what I did was I sold a cash secured put option and had a strike price of 415, right? So what is a cash secured put option? So when you sell a put option contract, you are essentially agreeing to buy 100 shares of the stock if the price of the stock is below your strike price, and in this case the strike price is 415 on the day that your contract expires, right? So I sold a cash secured put, and so the cash secured part is based on the fact that you have to have the cash in your account in the event that you have to purchase 100 shares of, in this case, Moderna stock, right? So every option contract controls 100 shares, right? So if the price of Moderna stock is below my strike price of 415 when the contract expires, I have to spend $41,500 to buy 100 shares of Moderna stock, right? So what happened? Well, you probably have guessed by now, but when I got into the trade, I sold the cash secured put option at a strike price of 415, and I received $350, right? So let me just so I received 300, right, and $50 for selling that cash secured put option, right? So I'm looking to walk away with that without having to buy 100 shares of Moderna stock. But lo and behold, the stock begins to fall throughout the week, and that following Friday, less than a week, that following Friday, the Moderna stock was selling for less than $415 per share. So what happened? I ended up having to buy 100 shares of Moderna stock for $415 per share. So I spent $41,500 to invest in a company that I had no intentions of investing in. I would never invest in Moderna or any of those other companies, if you know what I mean, right? And so no problem. So now I'm owner of 100 shares of Moderna stock, and so what I did was um, I turned around and I sold a cash covered call option at the strike price of 420, right? So, what is a cash covered call? So, a cash covered call is similar to, like, for those who are in real estate investing, it's similar to renting to own a property, right? So you can rent your property and give the renter the option of actually owning the property, right? So you can rent to own. And in order for that renter to have that option to own the property, they have to pay a fee for that. So a cash cover call is sort of, it's similar to renting to own your stock, right? But the person who is renting to own your stock is going to pay you a fee. So I sold a cash covered call option at the strike price of 420, and I made on that. I made $1,630 on that cash covered call. Right, so I just put CC. So CC for cash covered call, CP for cash secured put. Right, so just straighten this out here. Okay, all right, there we go. All right, so yeah, so I sold the cash cover call for $1,630, and so now a cash cover call is essentially me agreeing to sell, right? Because the cash secured put was me agreeing to buy. Now the cash cover call is me agreeing to sell my 100 shares of Moderna stock for $420 per share in the event that when my cash cover call option contract expires, if the price of Moderna is above my strike price of 420, well, then I have to sell the 100 shares of stock to whomever bought the cash cover call option, right? But nevertheless, I'm being paid to agree to sell my 100 shares, so I'm being paid $1,630. I get to keep that money, regardless of what happens, right? So, um, so basically, what happened was, so today is Saturday, September the 18th, right? So this past Friday, on September the 17th, we can see here that the price of Moderna is at what? Is at $430.05 per share. So that's obviously above my call option strike price of 420. So what happened? So the stock got sold on my behalf. The stockbroker takes care of that. They sold the stock to whomever bought the cash cover call option at a higher price point of $420 per share, right? Because remember, I had to buy the stock at 415 per share. So I'm turning around and selling the stock at 420 per share, right? And so every option contract controls 100 shares. So in addition to the 350 that I made for selling the cash cover call, the $1,630 I made for selling the cash cover call, the cash secured put, I made 350 on. The cash cover call, I made 1630 on. And so now the stock has gotten called away from me. I've actually sold the stock because the price is greater than my strike price of 420. So I make an additional $500, right? So altogether on this particular trade, I made $2,480 in about in 4 weeks, um, on this one options position, right? So that's the great thing about options. Options are so versatile that there are many ways that you can make money. And majority of the time, you don't actually have to buy any shares of stock in any particular company. You can just pretty much just sell option contracts and make weekly, bi-weekly, or monthly income from the sale of these option contracts. So I just wanted to share that because I was really looking forward to having my shares of Moderna stock called away from me because again, I had no intentions of investing in Moderna. So I appreciate you watching the video, and hopefully you learned something from this particular video. And if you're interested in learning how to trade options, my website is in the description below. And also I have a great ebook that actually demonstrates the various trading strategies that I use, various options trading strategies that I use to make money from the stock market most of the time without having to buy any shares of stock. And I do this on a weekly, bi-weekly, and monthly basis. So the link to the ebook is also in the description below. And within that ebook, you have you'll have links to videos that actually demonstrate how I implement the various trading strategies that I mentioned in the ebook. So if you're interested, check it out.